Folks, welcome to the opening bell with Dan Frio. I am Dan Frio, and this is your rate update. So, what do we got going on today? Well, some news, good news, bad news, and some not so whatever news. So, let's get on to the headlines right now and see where they're telling us. So, you see right here, the Dow Jones is coming in up 200 points. Usually good news for the stock market, obviously, but usually not good news for mortgage rates in the bond market. What's going on? Oil prices are falling for the second day and inflation coming in a little bit lower than we expected. Let's go into this. This is an area that really ticks me off. I was the other day I was coming into work, and gas prices I think changed twice on my way back into work and back home from work. Here's what happened to gas prices or oil prices. I'm going to take that back. Over the last month, you can see that huge increase right here. Well, what happened? Well, basically, as soon as this hit here, everybody and their mother changed the price of gas at the gas station instantaneously. Well, how long is it going to take them to come back and bring it back in check, since we're basically almost where we were about a month ago? So just something to ponder. It's like mortgage rates. When they go up fast. When they come down slow. So that being said, what's some news that came in today? Well, we got some news from the retail sales, core retail sales. It was coming in at 3.3 and the expectations is 0.9. Don't have that news yet. We don't have a lot of this news yet. But what are we going to see here? That's my biggest concern, because the Fed is meeting today and they're coming out tomorrow to tell us what exactly they're going to do. Well, the one thing I want to tell you guys, if you've already gotten a mortgage quote and you're not locked in, get another quote, because yesterday's debacle in the bond market, the mortgage-backed securities market, pushed rates up substantially. How high? Great question. Here we go. Guys, we're getting to the 4.5 quicker than I thought. So if you're out there and you're building a house, you're probably freaking. Please call in and ask us for our long-term rate locks. It might be a higher rate. I'll tell you this, it will be a higher rate than today's rates. It might be not as high a rate as what you're going to see 6 months or a year from now if you're building. That being said, you probably got pre-approved in the 2s or low 3s. Now rates are in the 4s. Do you still qualify? That's the question. How much higher is your payment going to be? So I'll talk about that later today. So let's get into this. Here's where mortgage rates are for the day, and I'm going to show you. This is how they open. I'm going to show you what they're doing throughout the day with the MBS chart that we're going to show here in a second, and I'll explain that in a second. So we come across here. Where are mortgage rates? Well, the 30-year fixed is over the 4.2, over the 4.25 that was expected by the end of the March, but we're teetering on 4.5. I figured we would be there by summer. I don't know how long summer's off, but we're almost there. We're basically there. Here, and I'll explain. 30-year fixed rate is 4.41, up an eighth. Okay, it comes with a cost. That cost is almost a half a point. So when you factor this into this rate, we're at 4.5. Okay, if you like it or not. Go across here. What are we talking about? Well, the 15-year fixed rate's coming in 3.72, up 18 basis points, also coming with a cost. The FHA/VA up over an eighth as well, coming in at 3.88. We are way in the 52-week high on all these. 30-year jumbos up 0.9 or 0.9%, 9 basis points. Scrap that blooper reel. At 3.85, and the 4 or 5-year ARM is coming in dead on at the 4% rate, up a quarter percent in a day. Let's see what the trends are. We got some good trends coming in right now. You see over here where rates have skyrocketed really fast. All right, and it's just the trend or the chart of mortgage rates. What's the trend right now for the MBS market? And I'll explain that in a second. It is really good, really positive, significantly stronger. Okay, what's going on? What's going on with this? What is it? Well, let me explain this real quick for any newbies out there. Mortgage rates are tied to not the federal funds rate, not the prime rate, not the Dow Jones, not the Treasury yields. They're tied to mortgage-backed securities. Mortgage-backed securities is the bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay, here's how this works. As the bond price goes up, it drives down the yield or your mortgage rate. Okay, so we like when the bond price goes up, it drives down yields. When the price goes down, it drives up yields or mortgage rates. So where are we right now? Well, we're recovering a little bit from yesterday's debacle. We were down, I think we ended up down over 70 basis points. We were at one point down over 90 basis points yesterday. So we're starting to bring back a little bit of those numbers. Let's see the live report right now. It's up 27. So this is just a little bit delayed. Let me refresh that. See if it comes back. It's at 22. So this is still what I use. I don't know if you can still see it. I'll try to zoom up here if I can, but it is coming in at plus 27. If I go back and show you what happened in the last 2 days, look at this chart. We crashed yesterday. This is where I said we were down at 90 at one point, and then we've recovered ever since. So we this may be a short-term bottom. This might be telling us some things what the markets might know ahead of the Federal Reserve meeting. So that being said, my name is Dan Frio. I do the rate update every morning, and then I come back in the afternoon giving you some information about programs, ideas, and my thoughts on the housing market and interest rates. If you'd like to find out more, check us out at therateupdate.com or give us a call at 844-775-5626. We are the nation's largest brokerage at this time, so we can help you guys find that mortgage that you otherwise probably couldn't find. So God bless, guys. Thank you so much for watching. I'll see you later this afternoon.